Everybody. TGIF, maybe it's good as Friday, maybe it's not. I don't know. I'd rather it just be the market's open all the time. Personally, I love doing this stuff. Hey, good evening, good morning. Was it good morning, good evening, good night? Good morning, good morning, good afternoon, good evening, good night. There we go. Welcome everybody. Market might be opening here in 15 minutes, possibly. We'll see. Anything can happen, right? Everybody's like, market opens every day, 9:30. It's like, unless it doesn't. Anyway, welcome to the show. Thinking about the good old days. Back when I just used to do urban farming, where I did a YouTube show, and, plant a seed, watch it grow, take it to the market, sell it for profit. Simple. Well, seems like some of the leaders in the United States might have found a way to complicate this. Classic story. Really? I mean, boy meets girl, boy loses girl, farmer plants soybeans, farmer loses entire country as a customer. I mean, it's a tale as long as time. So what's the latest chapter in this agricultural soap opera? We don't usually talk about the farmers and anything around here, but the headlines, they're screaming right now that the Trump administration is going to swoop in and save the day with a potential 14 billion with a B dollar bailout for the hardest working farmers in our country. A substantial support package is what Trump has been calling it. This is the ridiculousness of tariffs, right? This is where the money's coming. That's where the money's gonna flow. But is it really going to farmers? And where does this money come from? We're in debt, right? Why? This money is supposed to come from those tariffs, of course. It's like magic money. Magic, they count the tariffs for the debt and yet our debt keeps growing. And the deficit between how much money we took in and how much money we spent was the largest yet in August. This magic money tree keeps growing more debt. So the official story is that this is all just negotiations. No big deal. China's playing hard to get. You'll see. We're going to get this. They're not buying soybeans. And everybody thinks it's for negotiation reasons only, according to the president. It's like when you're in a relationship and you pretend you're not interested to make the other person want you more, except in this case, the other person already moved on to Brazil and Argentina and replaced all of our soybean growing supply. That, my friends, is the real story. This is not temporary. China has been quietly and not so quietly actually investing in Brazil's agricultural infrastructure for the better part of a decade. In fact, the first round, when Trump was in office, kind of kicked this ball rolling. They've been building roads, they've been building ports, they've been building storage facilities, everything you need to create a soybean superhighway from the heart of South America right to the dinner plates of the Middle Kingdom. This isn't just a negotiation tactic, it's a strategic divorce. And our American farmers, well, we're the ones left with an empty house and a whole lot of surplus furniture, or in this case, surplus soybeans. This was a bumper crop year, and there's no other place to go sell them. Not in a big way. There's no replacement for China. There's not countries that we just need to swap into. It's kind of like counting on the U.S. being the market that China needs to sell in. So what does this mean for us? Investors who are always looking for the next opportunity? Well, while the politicians are busy playing their games of chicken. The market created some interesting opportunity, interesting openings, interesting potential. So let's talk about how you could potentially play this chess match. First off, we have the commodities themselves. We've got the Tuckrium Soybean Fund, SOYB. It's an ETF. Gives you direct exposure to soybeans. But if we can't sell them, are they going to keep going? They've been on a tear this year, up over 27% over the last year. And if you think the situation is going to get even more volatile, this could be your play. For those who want a broader agricultural play, we've got the Tuckrium, however you say that darn word, Corn Fund, CORN, and we got the Wheat Fund, WEAT. I've talked about that before on the channel. You know, when Ukraine, the world's breadbasket, the largest producer of wheat, started war, it looked like wheat was going to go on a tear. But then all of a sudden, things happened, and their wheat got to the market after all. It's funny how this kind of plays out when there's a shortage of some sort of commodity. The solution to higher commodity prices is higher prices, except for Bitcoin. Bitcoin doesn't work that way. But gold being higher price, that means that more people can afford to mine more gold, which will increase the supply in the market and help alleviate those prices. But is that today or is that tomorrow? I don't know. The solution to higher soybean prices, the higher solution to higher corn prices, the higher solution to higher wheat prices, sugar prices, coffee prices. A lot of times it's just higher prices because you can afford to do more infrastructure projects. And same with oil too. So in general, the solution to higher commodity prices is higher prices. It lets people invest in the production of those commodities. Why not Bitcoin? Because it works different. Anyway, off on a tangent there. So wheat and corn, they're kind of the less dramatic siblings in this family drama because, well, soybeans are the main bumper crop this year in the United States. Yet, China is buying none. Zero. Zip. Nada. For the United States this year. So, why play the victim, though, in the United States when you could potentially play the winner? The winner in this case, Brazil, clearly. This is a new agricultural sweetheart, and China is investing directly in their future. You can get a piece of that action through, like, Brazil Agro. The ticker is LND, Lima November Delta, which is an agricultural real estate company in Brazil. It's kind of like buying beachfront property. Instead of buying sand, though, you get some fertile soil with a whole lot of soybeans planted on it. And it even pays a pretty fair dividend when you wait for the harvest. And let's not forget companies that are selling the shovels or the farming equipment in this agricultural gold rush. John Deere, DE, it's an iconic American company. It's set some inroads into this future of the fertile fields of Brazil. They're expecting their sales in Brazil to overtake Europe in the next few years, maybe 5 to 10. So American farmers are getting a bailout. John Deere getting a boom. They got in on this action. So there you have it. While the politicians are playing pass the potato or hot potato, maybe trying to put a Band-Aid on a bullet wound, smart money might take advantage of the real winners. Let's find out who the real winners are. China has a new dance partner, and the United States is not it. But it doesn't mean we can't make money off this new thing. After all, in the world of investing, there's always a bull market somewhere out there. You just have to know which bushel of soybeans to look under. And that's what we have for today. Do your own research on it. Stay sharp. I'm not telling you to buy or sell any of these. Remember, all trading involves a substantial risk of loss. Past performance not necessarily indicative of future results. This show intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling anything, including stocks, options, bonds, forex, futures, cryptos, treasuries. You know, you might lose money doing this thing we do. Surprise. So if you need somebody to tell you what to do, hire and consult a financial advisor. I make predictions. Sometimes they come true. I may never get another one right again. Kind of suck because that's why y'all come and watch me, right? Find out what the good stuff is. So today, since we had the government shutdown, the unemployment numbers not coming out. No unemployment rate, no jobs for September, no nothing here. That's cool. Punt it down the road. All the BLS numbers are going to be postponed indefinitely until the government opens back up. One reason for that, we don't even have a BLS head. FOMC meeting minutes due out next week. We'll see if these unemployment claims come out next week. We didn't really get them yesterday either. Yeah, no unemployment claims last week or yesterday. Yesterday, because government shutdown. So makes it interesting situation. Yeah, the U.S. government data may be impacted by the shutdown. Tentative events are subject to delay, revision, cancellation. That warning at the top of the screen. Hey, I'd love it if I got to stay home and not do my job and eventually still get paid for it. How about you? Anyway, how we make money today, right? Let's talk about some opportunities that potentially are coming down the pipe here. Yeah, that's the right list today. So Lilly presented an interesting, or it's presenting an interesting thing. We got this pullback, and it looks pretty nasty until we flip it up to a weekly chart. This might be the bottom. Right there. 618 close. Target up here. This presents an interesting opportunity. Now, this is expensive. Expensive, but this one's not so expensive. And offers some 2x leverage. Potentially. I was talking about this with Jack yesterday. Potentially. There's not a lot of options here, but not a lot of options. Get it? But potentially you could sell an option down in here. Maybe a 14, maybe a 13, maybe a 15. If you think Lilly's going higher, put some shares, get paid to put some shares. Take them on, ride it up. Now, the interesting thing here, if you were to take these shares down in this price range, we flip back to the Lilly chart. Here, this is the signature pattern that I look for on all time frames. Now, the upside here would be from here to here, right? That's roughly 25%. So you take that and apply it to something like little x with 2x leverage on it. That means like possibly 50% upside. You're like, whoa, that's not a higher high. That's why I always say my patterns don't necessarily work on leverage. Remember, when you have a 2x leverage and you get a 50% pullback in the underlying, that could be 100% pullback on a 2x leverage. Now, a 50% pullback on leverage, which would be a 25% of the underlying, 50, let's just rewind this a second. A 50% pullback in a stock, 50% pullback takes 100% on the upside just to recover. And you think about it, you have something at 4, cut it in half, go to 2. Now you got to double that just to get back to 4. All right, same thing, like 100, cut it in half, goes down to 50. Then you got to multiply by 100% to double it back to 100. But that's with 2x leverage. So if you had the underlying at 100, and you just lost 25% down to 75, and then you gain that back, it's only like a 30% upside to go back up to 100. Like 1.33. You see the difference here. 33% upside would be only 66% upside here. Well, that's short of the 100%, 100% gain you would need to get back to scratch. That's why pullbacks are detrimental to these right here. So watch out for giant pullbacks. These leverage instruments can be pullbacks can be very detrimental to them. This right here, if we just take Lily up to that new all-time high, 50% upside. Not bad. Now, could it underperform on the way there? Absolutely. But there's the potential right there. It's not huge numbers. We're not talking hundreds of dollars higher, but 50% is 50%. Let me know in the chat if you found this little exercise beneficial, helpful in any way. Trying to come up with content that helps everybody out. ES overnight. Look at the S&P futures overnight. Well. Hit the targets. Hit those targets. Dun, 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 dun. Had that pullback, shot higher, went up to the 1618 and stalled out. Did another bounce. Right there. Came up right short of the 1.1448 and take another trip down. That pretty much all happened overnight too. So watch out for some topping action. NQ's gonna kind of been the one steering the train here. This is annoying me. I saved this the other day. Oh, now it's got a... Well, that's cool. Why is it like... That's acceptable. I can see that, but it's more acceptable than the blue. So we've got that pullback, a potential to go higher. Now, looking at the bigger picture here, we had a pretty nice 5 up, pretty nice 3 down. That was a 5 up. We may get a retrace off of that before we can go even higher. So this high, potentially a 1. This low, potentially a 2. This move, although we're just stopping at equality right now. Something we got to watch out for. That could be an A, B, C, even though we went to a higher high. Need to watch out for this. We need this to hold in this vicinity and go on up to here at least. Maybe even up here before we get to 4 or 5. But that could be the last move for now. So very cautious on this. Probably finishing out this move up. Could any time now we can invoke a bigger pullback in the market. And funny enough, the VIX, the big VIX order that went through, kind of corresponds with that. It's kind of interesting. Gold coming ripping back up. A big gold order I picked up on. $37 million of GLD at 350. That's a big order. Somebody spent $37 million on calls for GLD at the 350 strike. $37 million. That's pretty crazy. I don't think that was a oops. I mean, that's a big order. Big mamma jamma. Just in case you, and this was not yesterday, it was the day before yesterday, the 1st. And it was out to the 10th. So not this week, but next week. Out here to the 10th. Somebody bought $37 million. That's what they spent on premium, not, usually when I talk about notional value of the options, I'm talking about, unwind them and the value of the shares that option controls. Usually that's what I'm talking about, but this was actually $37 million in premium. It's like when you buy a 10-cent option, you're spending $10. Well, they bought a $7 option, or $7 to $8 option. They were spending $700 per option, and they did that like 47,500 times. Bought that many contracts. It was actually $785, so $785 per contract. Multiply that out, 37 millions of dollars just on premium. That's some crazy shenanigans. Let's see what happens on that one. Russell. I'm not saying to buy it. I'm just saying somebody spent $37 million. It was a big trade. That kind of trade can push the market around. I would venture to guess it's somebody that wanted the shares that didn't want to push the market up. And they took a calculated bet. They're like, I want to buy basically at the money. If I go buy 37 million shares, even in the dark pool, I think I'm going to push the market up a lot. Look at the volume here. The volume only been like 16 million. Right? 15, 16, the average here. Average daily volume around like 12.95. And they're looking to buy 47,500. Put 2 more zeros on it. For the options, move that over. You're looking at 4.75 million shares. Well, that's like a third of the day. And funny enough, when you buy calls and force somebody to give you the shares, it doesn't show up in the volume. I've seen this before where some big player wants to take shares. They go buy calls and then flip them out. Flip them into shares. So that could be somebody's very large. I want to go at the money, but I don't want to push the price $7 or more. Could be a calculated risk, right? Like they thought that they would push it higher than $7.85, or the shares going in the dark pool were more than $7.85 higher for that big a block of shares. So, but that doesn't mean the price has to go higher here. Just means somebody wanted to buy a big block, and this could come down. Oil below all those lows. So we've got this potential 1, 2, 1, 2. Watch out now. Things could get spicy here. There's the potential to exceed the downside target at 50. Potential, but gotta see what happens. Nope, I did that wrong. Clicked that wrong. I'm used to going up, not down. 1, 2. Let's just look at the current one. 1, 2, 3 would put us down at 53. And that could get us there. So, still long SCO. Looking for this pop. This actually showed up on the list yesterday. Still looking for 21, maybe 22. If things can get spicy here on oil. And then once we make a bottom and the missiles start flying, another way to play, you know, playing long side when prices are probably going higher, UCO. And if you just want to be a little bit more neutral, you can play USO with calls or puts. But that thing's kind of watermelon seed squeezing at this moment in time. This right here has the potential to come on down, maybe to 63, possibly even on down in the 50s. Gold just being crazy. Next target up is right up there around 4,100. Bitcoin, well, gotta keep going. At this point, target's right up in here. Although we're hitting kind of the resistance, we may see a temporary slowdown before we pop on up in here. I was kind of expecting us to make it that high on this move. At least new all-time high. And this may result in a rapid appreciation up into the 150,000 area. Maybe 170 on the upside. That's all I was really looking for in this cycle. Now, there is potential that we go twice as high. But I'd probably start booking out your profits and just pull it back to a reasonable risk level for going higher. I'm going to keep holding all the Bitcoin I have zero cost in. And no matter if we pull back to 40,000, I'll still keep holding that core holding. But all the stuff I've got taking advantage of this crypto summer, probably going to be getting rid of it in the next couple of days or weeks or months if we get up in this area. It's time to really, really evaluate what you got, what your plan is. Do you want to hold Bitcoin pulling back to 40? Even if you don't believe it's going to happen, you prepare accordingly. Ethereum struggling to break out. It's a warning sign. Now it can just pop and go, but it's a warning sign that we didn't just break through. Can take another spill down, and we can be right back down here. NKD, there it goes, as we talked about. Might be on the way to 48. Talked about 48 for over a year. 49.50. I mean, if we go super spicy, we could be up around 53, 54. See these extensions back here, 48, 53. Dollar. Check in our old buddy, the dollar. US dollars. So far, holding the breakout. Like, this is what we wanted to see with Ethereum. Like, bust through, back test, that downtrend of highs. So right now, as long as we stay above this trend line, I expect the dollar to come up here. Despite the somewhat corrective nature of this top right here, I would expect this to come on up to the roadmap line. It may be a bigger A, B, C type fashion. We'll have to see what unfolds there. Three-wave move. It could just be an A. This pullback could be a B, and then we could get a C wave up into the roadmap line, and then ultimately still erode this back down lower. So it could be a bigger A, bigger B, and a bigger C. Absolutely beautiful correction. So if we break down below here, we're probably doing that sooner. If we pop above here, we're coming on up here, looking for resistance before we may pull back down. I'm not sure the dollar's done on the downside yet. Yeah, so when on Bitcoin pulling back to 40? Probably, here's my prediction time frame wise. Next year, sometime out here. Pull this on down. We'll see if I'm right. It could be down to 40, but it could stop at 60-ish. Why would I think we might go down that big? Let's take a look really quickly. Just turned off some of my fib lines, but so if we come up here, 70% pullback, puts us right there at 50. And Bitcoin sometimes goes a little overboard. Could put us down to 40. And this won't be without bumps and humps along the way, but that's where I kind of expect us to bottom out. Somewhere down there. Put us a target in here. Could we get there faster? Absolutely. Could it be a little slower? Absolutely. There you go. That's Bitcoin in a nutshell. I expect it to top. And we've had this target on here for like almost 4 years. That's always been the next place it's probably going to go. Back to Apple. Mag 7s. If we can break out here, 276 on the upside. Amazon holding the roadmap line so far. If we can hold it, break out through that gap finally. We had that little gap down that's been heck of a resistance here. If we can finally break through it, on up to the targets at 1448. Extension, which would be 257. If we break down, watch out. We can go back to the lows. Google here. Now, log-wise, we hit the 1618. I mean, non-log-wise. If we turn on log mode, 263, which log mode with this giant pullback and that extension seems like it would be the more accurate one, especially since on log mode we struggled to get through this 618. But on non-log mode, well, basically the same spot. So funny enough. We gap through those fib lines. So if that was a top, we may retest here and going up. Now, which one? Log mode, not log mode? I don't know. They kind of have to look at both of them. If we go to log mode, 263, 339. Not log mode, 292, 315. It's a funny thing about it. You never know exactly which one to use. At least I haven't found a good way to know which one to use. Meta, looks like we're taking a trip back to the roadmap line. No two doubts about it here. I would venture to say we're coming back to the roadmap line. Be disappointed if we don't. Then if we don't hold it, could go deeper. If we do hold it, we can come on up to 840 area. Microsoft still just hanging. Like after moving this much, it's kind of gotten boring here. We've got upside resistance at 529, downside support at 474. If we get through that, well, could go deeper here. Now this one already did that 3-wave retrace thing I keep talking about. That was the A, B, C, and we shot off 62% higher. Now we're probably correcting that a little bit. So we can see that come into this area before we go higher again. NVIDIA, kind of the same situation. We did a big retrace. It was very sloppy over here. We've made a big expansion. We retraced a little bit, retested that 1448. Now the potential is to go up to 212 up here. Struggling to get through the smaller fib line extensions here. Next one up at 198. And we may, we could always take a spill right back down to the roadmap line here. Retest that breakout from those highs. So that's a big major support right here. As long as we hold that, we're probably likely to come on up here. Tesla. Beautiful pop yesterday on those delivery numbers, and we went right back down to the uptrend of lows. Uptrend of lows. So as long as we hold on to that, upside still intact. We couldn't even actually muster a test of the all-time high back here. But you look at where we did stop, or we did open. Look at that. That candle, that candle, that candle. Talked about drawing these flip points on where all the candles are. We tagged it and dropped. So we couldn't maintain anything above that line longer than a day. Holding true again. People that got trapped up here, probably selling out. Got my money back. Just want to be out after 10 months of holding, 11 months of holding. Boom. Now, there's still, yesterday on that drop, there was like $19 million in calls. 19 million in call premiums spent for November, December, January, looking for this strike up here or higher. That's a bunch of money flowing in, looking for higher prices. And you don't just spend 19 million at 500 expecting it to come to 500. You expect it to go way on through 500. Now, could it just be fools throwing their money at it? It's possible. Could we take a bigger dip? Absolutely. Netflix finally tagged the roadmap line. Oop, there it is. Oop, there it is. Ooh, shakalaka. Sometimes I get lucky on these predictions. Finally hit it. I've only been talking about that since we started dropping over here in July. Took, as Rongover says, that was way longer. Way longer. It's the thing about corrections. But This is likely not done either. That's a 1, 2. Looking at the 3, and we could do a 4, 5 to finish that baby up. Likely not done yet. Although that could be the 3. We could be working on the 4, and then we get a final little push down. So that you have to keep in mind the rules here. 1, 2, 3 just has to be not the smallest wave, which it already is bigger than 1. 4 can consolidate for a while. And then all 5 has to do, it doesn't even have to make a lower low, but usually to wrap this baby up, we would see a lower low. And that low right there. And 4 is likely to take 2 to 3 times longer than this right here with a theory of alternation. That basically took 2 days, 3 days. Depends on how you count. It's 3 candles, so 3 times longer would be 9 candles. So it could take about 2 weeks of grind in here and then drop out. All right. Let's see. Just bought GLD. Just check on the chat here. See what's up. Long NVO. We would love it. What did Kimberly say? Snakes and sparklers? Yeah. Kimberly, my favorite subscriber in the chat. Yeah, people dropping some good stuff in there. And yeah, NVO could double. Well, we'll see. Anything could happen, right? And let's see. 45 amount. It's not Tuesday. Prim. I can look at Prim. I don't usually do credit spreads, so we can look at it. How do you acquire shares? Or how do they acquire shares? So if you buy a call, you have the right to take the shares anytime you want. They could call it anytime. If you buy a call, it's a contract. Let's just flip in here. Go down to options. When you buy a call, it gives you the rights. All you have to do is click the button to execute somebody, and they have to deliver however many shares. So all they have to do is click the button or call up their broker and say, hey, I want to claim my 47,000 contracts. So I want the 4.75 million shares. And the broker takes your money, 350, which was the strike price, times 4.75 million, which is a whole lot of money. That's like $1 billion, like whatever, $12 billion, something like that, or $1.2 billion. I don't know. I'm having trouble with that math at the moment. Another couple zeros. And 12. I don't know. Yeah. Yeah, that's a big number. Should break out the calculator for that one. Not calendar, calculator. Wrong button. 4.75, well, 4.75 million times 350. Yeah, $1.6 billion. So the broker takes your $1.66 billion and buys shares of, and gets those shares from somebody else. So that's the way it works. Us normal people, if you had a contract, you're going to give your broker, if you had one 350 strike and you want those shares, you're going to give your broker $35,000 and they're going to give you 100 shares. You don't even care about who was on the other end of that. Like, you don't know, you don't care. This person, they don't know, they don't care. That's how it works. All right. Sell Amazon, buy CPNG. Huh? How do you roll a credit spread out to a later date? So, credit spread rolling out. That's you just buy back. So, on Tesla, I'd be careful playing credit spreads. One, but if you had one, let's just say I can actually pull up a platform and do this easier, probably. You just create the order. So let's say you're on the 10th. You've got, let's just say you got a put spread. So there's your put spread, right? It was a net credit. So what you would do is you would buy that back. So instead of, you would have to buy the short, sell the long, and then you fly out to the next expiration that you wanted to be at. So you want to roll it out to November. There's not the right strikes. So you want to pick one that has the strikes. That one still doesn't have the strikes. Let's go change the spread. They changed to $5 strikes. So you have to buy the 430, sell that one. If they don't have the strikes, it makes it even more fun and difficult to try to keep it rolling forward. Let's say you had that one for October 17th. And then we just sell this one. And you can get a net credit. You go out a month, and you can only get 40 cents more. It's not great, but it's more money and gives you more time. You just make one big order. You buy your short. Buy your short back, sell your long, sell a new short, buy a new long. That's how you create a rolling. Ideally, you want a credit, but that's not always possible. I'll show you. If you were at this and you were up here in the money, if you had to buy it back, and this may still show up as a credit. We're going to sell that one, buy that one. Yeah, 3-cent debit right there, 5-cent credit. So like you can't really roll that one forward a month and get anything. Hardly. That's the danger of being in the money with your credit spread. Anyway, there you go. Let's look at Prim really quickly. Primo Services. First off, we're going to take a look at the charts. Looks like it's going higher. Where would we be with support? I don't know. That's a big risk of it pulling back for me. We're already at the 1618. The only somewhat safe place to be, maybe down around 100. That's $38 lower, but if you want to be more aggressive, and then you don't have many option strikes here, or many expirations here. This one looks like a horrible one to try to do any kind of options trade on. Absolute horrible. I like to have lots of, basically this says that nobody trades options on this. When you look up one and you only have 4 expirations, first thing it says, number 1, Nobody trades these options. That's a red flag for me. That's a big warning sign. Like, doot, 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 doot. So unless you want the shares and you're trying to trade puts or something, number one. Number two, we look at the volatility. Not a lot to it. Best place to play is 2 months out. 1 month out, 2 months out. So December would be the best place to play, volatility-wise. There's no volume on anything. It's going to be very difficult to get a fill. The bid-ask spreads are ridiculous. I wouldn't trade this. It's just, even for an exercise of example, like this is ridiculous, like to even consider. I'll show you what I mean. Like on a broker platform, we can pull this over. Like, just because you can doesn't mean you should. Like this, there's no open interest hardly. There's no, like, especially in the puts. You're trying to do a put credit spread, and there's nobody trading these puts. There's only like half a dozen contracts out here. Like, this is just a bad idea. But you could, 77-cent credit maybe on a $5 risk. It's not the greatest. Really, you want to be down at about at least 100, if not slightly lower. 13 cent. There's better places to put your money. That's a 250 risk. 13 cents. It's not great, especially for 2 months out. It's only a 5% return for 2 months and 77 days. Times 365. It's only 24% annualized. You can do better. You can do way better than that. It's not a great return, but I mean, maybe that fits for you. I don't know. I'm not saying what's right for you in your account, but I wouldn't play with the low liquidity, and you probably can't get 13 cents. But anyway. Moving on. Gainers. QBTX popping. That's at resistance. Watch for the pullback. RGTX resistance. Watch for a pullback. Reddit coming back down, hunting that roadmap line. Even though it's on the gainers list. AV. This one shows up quite a bit, and we're up past the, getting a lot of loft here. Careful. One thing you should look at on GLD here. Circle back for a second. Look at this right here. Let's see. Weekly chart. So we're kind of coming into this long-term upside resistance zone. And we've got a lot of loft in here from that back down to the roadmap line. There's a large downside potential cooking in here. It's getting kind of way out over the... We haven't actually hit the... That's crazy. Haven't actually hit the 3 standard deviations. See what happened last time we hit the 3 standard? I chilled out. If we hit that 3 standard deviations up around 366, probably chill out for a few months. You can see what we did right here. We do that again right here. Maybe like, where'd you get that indicator? Yeah, I wrote it myself. Ugh. I don't like these things right here. Not enough candles to do anything with. A little bit of chaos. UNH coming up into the roadmap line. So like, look at this. 1, 2, 3. Be careful. That can be the A, the B, even though it exceeded the start point. And we could get a C down here pretty violently. Just be careful. Could push on through. If we pop up back test the roadmap line, that would be beneficial for going higher. TSM. I like to take calculated opportunities. If they don't present the price pattern that shows me what we're going next, I just skip it. All right, like there's opportunity everywhere. You don't have to play them if they're not showing good, clean price action. This likely to come on up here if we're going higher, but we're a long, lofty way off of the roadmap line. CRDO. First move down, retrace. Next move down can take us down here. A-Lab. First move down, retrace. Next move can take us down here. Leverage, leverage. Royal Caribbean. Where do you think I'm going to say? The roadmap line, of course. CLPT. Wow, that's a ridiculous pop. So, big picture, could we go higher? Yeah, but that looks like an absolute dumpster fire. So, it looks like the next episode of Pop and Drop. Bubble pattern abound. FUTU. Bubble pattern potential. And come back to the roadmap line would be expected. Silver. Whew, look at that volatility on leverage silver. We're actually breaking out here on that high, but got a long way to, she's got a long way to go. See how devastating leverage is? Like that silver chart doesn't look anything like this silver chart. So be careful playing leverage instruments like AGQ on silver. In the short term, this can, anybody that bought back here in the 20s when I said to buy, you're on a triple right now. Make sure you book and reset your risk. USAR, crazy. That's a SPAC looking thing. I wouldn't touch it. MPC has potential to come out of here to 237. We tagged that, like we tagged the correction zone. Setting the entry. There's the target right up in here. These aren't difficult. Just follow the pattern. There's the pullback. This is on a weekly chart too. Made the bottom. Here we go. And upside could be even bigger, but because that was a 50% retrace. So the crazy part here, the crazy target. And this could take a while. This is not probably going to be very fast, but the crazy target here is probably up here at 454. And that could take well out into the 2030s to get there. And that could be way over here. Time is the hardest part of all of this. Leverage, leverage, leverage. IOND. INOD. Wow, that looks exponential. Be careful. Crazy. ETR. That was I had to have a split in there. Yeah, regular split. So all my stuff is not accurate anymore. Pushing on higher. Next upside to the 200% at 101. PPLT 160 has been the target. Coming up on it. Could go as high as 180. It's low. Oh, there's that violent pullback to the roadmap line. Got it. Check. If we can break back above the 86 area, 97 on the upside. decliners, KLAC. Back to the roadmap line. RBLU. Coming back to the roadmap line. Roblox. Coming back to the roadmap line. Applied materials. Not sure. That could be starting something bullish, but let's see. And this could be a B wave even higher here. The B can be all the way up in here and still go down for a C. We are coming up into the ideal spot for this to be a little baby A, little baby B, little baby C, and then still go down. So caution is advised. And this kind of brings the level up just a little bit. CLS, stalling out, watch for the retrace. Stuff set up for an entry today. Let's just take a look. ASO, here's the high, here's the low. Entry, 59 target, BitX. I wouldn't use this, but we have the potential to pop up to 80. I've said that for a long time, but the roadmap line bounce, if you wanted to play it, would be up to 71 CPRI. Wow, that's a little baby move right there. Here's the high, here's the low. Entry, 22 target, 2270. CSV, oh, that's a nice clean looking move. 5048. And GE Healthcare. Wow, that's been consolidating. High, low, missed the candle. 81 on the upside potential right there. Does have a gap down that we would have to contend with to get there. Be careful out there. The account you save may be your own. As far as S&P goes, probably grinding higher. Yeah, 6,800 is probably. Looks like we got a date with 6,800 in the next couple of days, weeks. Right there. Be careful out there. I'll be back on Monday. I'll be on Market Masters here at 11:30 with Jack, talking about potential opportunities. Have a great day. We'll see you on Monday.